Has it only been a week since we last spoke? It seems like a novel has been written here. There is a lot to keep tabs on. And so it is really a matter of deciding what are the most important stories. So hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. So getting into it, of course, the big news last week, the US and China came to an agreement, seemingly on rare earths. I mean, just initial reflections here, it all seemed a little too convenient. And you do wonder, what was discussed behind closed doors? Was it simply about tariffs, or were there all sorts of issues? You know, you could speculate, was it weapons deliveries to Taiwan? What was it that was really delivered to China? Because in a sense, there's an inconsistency in China's position. We could argue in the sense that their whole justification, their rationale for restricting rare earth exports was because they would be used for military purposes and they wanted to not proliferate weapons. I mean, it was military usage. So my question here is, what changed? What has changed? Did tariffs change what one could argue from China's perspective was a principled view? Right? So again, what changed? So let's take a look here. U.S. gets rare earth reprieve from China, but not rollback. And this is Reuters via mining.com. China has agreed to delay the introduction of its latest round of rare earth export controls as part of a deal agreed between Presidents Donald Trump and Xi Jinping. But earlier restrictions on the critical minerals that have upended global trade remain. Indeed, that is a very good point that Reuters is bringing up. From the sounds of it, it's only the most recent restrictions that were brought into effect in early October are the ones that have been rolled back. Trump and Xi met in South Korea for nearly a 2-hour summit on Thursday, after which U.S. President said China had agreed to keep rare earth exports flowing and the issue was, quote, settled. Shortly afterwards, China announced it would pause for 1 year export controls introduced on October 9th, when Beijing expanded its rare earth export regime to include new materials and rules, according to a release from the Ministry of Commerce. However, the pause appears to leave in place restrictions introduced in April, which control exports of 7 rare earths, and notably, the rare earth magnets crucial to automakers, defense companies, and chip makers. So a muddled picture, actually. U.S. Trade Representative Jamieson Greer, also speaking on Air Force One on Thursday, said China would not impose its proposed rare earth controls. He did not mention controls introduced in April. It was the April controls which, within weeks, caused shortages across the auto supply chain, forcing automakers to pause production at some plants. China's statement, which also included a pledge to study and refine plans, provides enough ambiguity and flexibility for Beijing to deliver on a rare earth deal with the U.S., according to Tim Zhang, founder of Singapore-based Edge Research. Quote, overall, we would call this a tactical stabilization at this moment. China's export control announcements on October 9th also included new restrictions on electric battery equipment and industrial diamonds. The battery curbs sparked panic among some foreign customers of China's world-leading battery sector, leading India's Reliance Industries and others to rush shipments out of the country before the early November deadline. It is unclear whether the commitment to pause the October measures also includes batteries and industrial diamonds. China's Ministry of Commerce did not immediately respond to questions from Reuters about the subject. So a reprieve, but not a rollback. Now, one of the other major parties to this issue, of course, is the European Union. And they had been trying to negotiate with China, of course, taking over Nexperia, at least getting rid of the Chinese CEO in recent weeks, which, from what I'm reading, doesn't sound like it really worked out in the way that the EU is hoping. So we have a headline from the Politico: China's pause on rare earth export controls extends to EU. And this is November 1st by Jacob Wiesman at Politico. China confirmed that its suspension of export controls on rare earths will extend to the EU, the bloc's trade chief Maros Sefcovic said early Saturday. Quote, China confirmed that the suspension of the October export controls applies to the EU, Šefčovič wrote on X Saturday morning. Quote, both sides reaffirmed commitment to continue engaging on improving the implementation of export control policies. He added, this is quite interesting because really, by adding all of these extra export controls on October 9th, China was able to go into negotiations with the U.S., and all it sounds like they really did was roll back, as Reuters astutely put it, the October 9th additional controls. But the earlier controls do sound like they remain. Speaking to reporters in Rome on Friday, Šefčovič said the EU is now having, quote, high-level official talks on export controls with China. I will speak again with my Chinese counterpart very, very soon. Šefčovič also said he envisioned a, quote, common purchase of critical raw materials by the EU. We can do the bidding on behalf of the biggest trading bloc in the world, which is the European Union, and to get the critical raw materials for a better price. The EU trade chief said, so from a distance, I'm not sure they're in a huge negotiating position here to bargain for better prices. It sounds like the EU should be pretty happy that they were included in this deal. Now it sounds like the EU wants a bargain. We'll see what happens. We also had a story in the Financial Times, EU pressed to back critical minerals projects as China tightens grip. And this is by Camilla Hodgson and Alice Hancock. The EU must move quickly to back the critical minerals sector and allow more state intervention. After China banned key exports of raw materials, a group pushing for energy security has said. The next EU budget must include, quote, substantial dedicated funding for critical minerals. With money drawn from energy and decarbonization budget lines, the European Initiative for Energy Security said on Wednesday, following Beijing's announcement of an export ban earlier this month. EU policymakers are racing to develop stockpiling strategies as a resource war escalates between Beijing and the West. China dominates many critical mineral supply chains, including rare earths and the battery metal lithium, and its export controls on key metals, including rare earth elements and germanium, which is needed in the defense industry. The initiative said institutions such as the European Bank for Reconstruction and Development and the European Investment Bank should consider taking more or bigger equity stakes in mineral projects, mirroring the U.S. government's recent investment in domestic rare earths group MP Materials. Scrolling down, Eric Eschen, chief executive of permanent magnet maker VAC Group, said the EU had, quote, finally woken up with the latest draft of Chinese export controls, telling the Financial Times there were, quote, a lot of emergency calls going on in response to the tightened rules covering rare earth products. The priority for policymakers should be to invest in, quote, the right mines and the midstream. It was too late to stockpile because governments would struggle to get the required material out of China, he said. The Commission has proposed that part of a new $409 billion fund in the next EU budget, which will run from 2028, should be dedicated to critical materials supply chains. Well, I commented on this last show that the $1 billion that we're seeing used in regard to these minerals and securing the supply chain was really a drop in the bucket. A week later, we're seeing hundreds of billions of dollars being discussed. So it's going to be interesting to see how this all plays out with all of the Western governments jumping on the bandwagon. We're going to see Canada as well. This could get bizarre, frankly, as far as the investments that are going in. But ultimately, I mean, that's what this industry needs. For a long time, it has needed capital. And here we have some bigger numbers in this next story. This is by a staff writer at mining.com. Vulcan Elements, Re-Element Technologies signed $1.4 billion rare earth magnet supply deal with the United States. And that is by a staff writer at mining.com on November 3rd. Vulcan Elements has entered a $1.4 billion partnership with refiner Re-Element Technologies and the U.S. government to scale the company's development of a domestic rare earth magnet supply chain. The Commerce Department and Pentagon on Monday pledged financing and potential equity stakes in the domestic producer of rare earth magnets that are at the center of an ongoing trade war with China, the world's dominant supplier. The Department of War will receive warrants in both Vulcan Elements and ReElement Technologies. The Department of Commerce will receive $50 million of equity in Vulcan Elements. Vulcan, a privately held North Carolina-based startup, manufactures sintered permanent neodymium iron boron magnets in the U.S. for critical defense and commercial applications. It entered the U.S. rare earth magnet manufacturing race this year. In August, Vulcan and ReElement announced a commercial-scale offtake agreement for light and heavy rare earth oxides, the materials necessary to produce rare earth magnets. So the numbers are increasing here by the day. In a story in CNBC, the global critical minerals race is heating up and rare earth stocks are skyrocketing, and they have a chart of Critical Metals Corporation. It's quite interesting. So in October, Critical Metals, I believe there was talk in early October because all of a sudden, around October 1st, it started to move up, and it went from about $6.50 all the way up to the middle of October to a high of $28 intraday, and now has dropped back to $10.94 at the beginning of November, keeping the longer-term uptrend. But that was quite a jump there that we saw mid-October. So explosive moves, really, in rare earth stocks, reminiscent of way back in 2010, 2011, when China cut off rare earth exports to Japan. Another headline, Malaysia PM says $142 million magnet plant to boost rare earth sector. This is Reuters via mining.com on November 3rd. Malaysian Prime Minister Anwar Ibrahim said the development of a $142 million super magnet manufacturing facility in the state of Pahang will strengthen the nation's rare earth sector, state media reported. In July, Australia's Lynas Rare Earths and South Korea's JS Link signed a deal to develop a 3,000-ton neodymium magnet manufacturing facility near Lynas's advanced materials plant in Malaysia's Kuantan district. Anwar said Malaysia's trade minister would monitor the project as it involves rare earth processing, state news agency Bernama reported on Saturday. Quote, JS Link has already purchased the land and wants to begin operations, so this is no longer a memorandum of understanding. The investment is in, the land is ready, so this is about accelerating the process. So, rare earths being developed on all fronts here. It seems like the top global priority right now. And continuing on, Canada is entering the fray. Canada backs critical minerals projects worth $6.4 billion. You know, it's interesting. We brought up the issue of whether Canada would be concerned about the United States taking equity stakes in Canadian mining companies. This was brushed off by an official, as we heard last week, but we are starting to see perhaps a need by the government to get their own stake. This is by Frederick Tomesco at the Northern Miner. Canada's federal government unveiled plans to support 25 new investments it says will help to unlock $4.6 billion US of critical minerals projects tied to the production of graphite, rare earth elements, and scandium. So that's just for, what I like to call here specialty minerals, because critical minerals includes non-specialty minerals. And I feel like when we're talking about rare earth elements, when we're talking about scandium, even to a certain degree graphite, it feels a bit more specialty than, say, nickel, iron ore, aluminum, and so on. Ottawa is also designating critical minerals as essential to Canadian defense and national interests, National Resources Minister Tim Hodgson said Friday at the end of a Group of Seven Nations meeting of energy and environment ministers in Toronto. This will allow the country to start its own defense stockpiling regime and to support multilateral stockpiling efforts. Prime Minister Mark Carney earlier this year opened a major projects office to fast-track energy and mining projects. Quote, if you need a proof point that the G7 and multilateralism remains vital and relevant, this is it, Hodgson told reporters. Quote, if you're wondering whether a middle power like Canada can truly be a leader, I hope you have your answer. Other measures announced Friday include joint offtake arrangements and co-investment with 9 allied countries and industry partners from France, Germany, Italy, Japan, Luxembourg, Norway, the United States, Australia, and Ukraine. Canada has also signed offtake deals with Nouveau Monde Graphite and with Rio Tinto for scandium. Quote, through the Critical Minerals Production Alliance and the G7 Critical Minerals Action Plan, we are mobilizing capital, forging international partnerships, and using every tool at our disposal to build resilient, sustainable, and secure supply chains, Hodgson said in a statement. Quote, these investments are foundational to Canada's sovereignty, competitiveness, and leadership in the global economy. So here's a very interesting, what I'd be tempted to call counter-narrative, that appeared on abc.net.au, an Australian news website. Australia is supplying China with critical mineral vital for hypersonic missiles and its nuclear program. Chinese companies are the largest shareholders in 2 Australian mines producing minerals vital for Beijing's hypersonic missiles and nuclear programs, helping it overcome, quote, severe challenges to accessing key resources. In a rare admission of its vulnerability, China says it depends on imports for its supply of zirconium, a little-known critical mineral. Australia is the world's largest producer and supplies China with 41% of its imports. Not only did Australian regulators allow Beijing-backed companies to become major shareholders in the 2 Western Australia mines, the federal government even gave one of them a $160 million soft loan to help it into production. Australia is supplying these raw materials vital for China's military buildup, while at the same time signing up to be a partner of choice for the United States as it seeks to break Beijing's stranglehold over the processing of rare earths and critical minerals. So, fascinating development there. And also, just some updates from Myanmar, the tip of the spear in the whole rare earth discussion, of course, where a lot of the heavy rare earths are mined. This is nationthailand.com. Chinese state firm expanding rare earth mines near Thai border, SHRF warns. The Shan Human Rights Foundation, SHRF, issued a statement on October 28, 2025, revealing through new satellite imagery that China Investment Mining Company, a Chinese state-owned enterprise, is expanding rare earth and gold mining operations along both sides of the Kok River near Mongyan, southern Mongsat Township in eastern Shan State, Myanmar. Images taken on October 14th show extensive changes in the area, including new road networks and mining sites at the forested foothills near the river's source, roughly 30 kilometers from Thailand's border at the Taton district, Chiang Mai. The mining waste containing heavy metals is reportedly being discharged directly into the Kok River. So, new mining activity in Myanmar near Thailand. Continuing on to the continent of Africa, so this is a global news story, as you are hearing. Ghana orders first major audit of mining firms in a decade. This is Reuters via mining.com. Ghana, Africa's top gold producer, has launched its most aggressive mining audit in a decade, targeting top miners to recover lost revenue and tighten oversight, a government letter seen by Reuters shows. Governments across West Africa are intensifying scrutiny of mining firms to enforce compliance with regulations and safeguard revenue from soaring commodity prices. It will be led by government auditors, forensic accountants, and independent consultants, according to an October 13th government letter from the Regulatory Minerals Commission sent to mining companies via the Ghana Chamber of Mines. Industry regulator, the Minerals Commission, is deploying teams for the nationwide physical and financial audit from November 1st to June 2026 to scrutinize production volumes, mineral flows, tax and royalty payments, and environmental compliance. Miners must submit 10 years' worth of production logs, 3 years of financial records, all permits, stockpiles, and shipping manifests by October 31st. And another related story, Mali revokes over 90 mining exploration permits, and this is Reuters via mining.com. Mali has revoked more than 90 mining exploration permits, including those held by subsidiaries of international mining companies, according to an official decree seen by Reuters. Companies affected include local subsidiaries of Harmony Gold, IM Gold, Cora Gold, Birmian Gold, and Resolute Mining. Another headline, investors call for creation of International Minerals Agency. This is Reuters via mining.com. A group of investors in mining called on Monday for the creation of an independent agency for the sector modeled after the International Energy Agency. The group of investors, which together manage or advise on $18 trillion of assets, said the new International Minerals Agency would be able to monitor global minerals supply and demand, as well as illegal flows, a statement said. So a sector in transition. So we have a wonderful guest this episode. We have Jack Lundin, President and CEO of Lundin Mining, who joins the program for a fabulous discussion, half of it on everything we've just talked about here, the global race for critical minerals, whether enough is being done for industrial metals, and we also discuss the world's deepest marathon and Jack's experience running the marathon for the first time over a kilometer underground. So fabulous interview there in this week's episode, as well as this week's Spotlight featuring Becker Mining Systems Canada CEO Albert Bauer, who discusses the latest developments at the company. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host these podcasts. And wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Albert Bauer, CEO of Becker Mining Systems Canada, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for this week's Spotlight, Albert Bauer, CEO of Becker Mining Systems Canada. Albert, welcome to the show.
Thank you for having me, Adrian.
It's a pleasure to have you. And maybe just actually very briefly, if you can you tell us a little bit about Becker Mining Systems, like a bit of background on the company?
Yeah, so I'd welcome the listeners to actually look at our webpage and get a better understanding of Becker Mining Systems. But in brief, it is a family-owned company. It was founded in 1964 and it expanded internationally. Our focus has always been mining, and our expertise lies in that. So from a safety perspective, all of our products is safety orientated, and communication has always been a pivotal point in that transition, with the latest being a specific focus on AI and data transmission from underground and what we now call digital mines or digital twins.
It's so interesting, the relationship between mining and technology in this industry. In some sense, some people feel like it is very slow moving. Other people increasingly are feeling like it's fast moving. So what kind of changes are you seeing from your perspective in the global mining industry in the last few years?
Yeah, it's an interesting one. I suppose from the outside, it does look like mining more often than not is a slow adopter of technology. It's not the case. It's just that there's a lot of lives that depend on the technology and making sure that it is ideally suited for underground or mining in general. And we've seen over the last more focus on, I want to say, staff safety from a remote perspective, whether it's tele-remote control or agnostic data, allowing users underground to be able to do the work that they would have needed to do on surface afterwards, speeding up the process. There's also the extent of removing people from dangerous situations underground. And again, back to the tele-remote being one of the most, I want to say, stronger drivers in the market at the moment.
Okay, excellent. So what do you see is the main driving force in advanced communication technology in mining in the present?
It's knowledge, but more than just the mere assumption of knowledge, it's physically actually storing and being able to utilize it. So the mines have always had an abundance of data being captured from underground and surface applications, but it's always been segmented in different departments. The new technology driver at the moment is bringing all of that together into one platform where the client can actually understand what's going on in the mine almost real time.
Okay, excellent. So what does that look like in practical terms then? How are mining companies using advanced communications? What kind of examples can you give of what is being utilized right now?
Yeah, some of the, I want to say, more concrete solutions would be typically from a reliable and robust communication system underground, where the users have got access wherever they are in underground workings to be able to talk to not just workers in the same level, but even on surface or internationally, globally, speaking to other people or users, but also then the data itself, whether it is from a conveyor belt or vehicle. Typically, some of the use cases would be identifying service intervals on vehicles, detecting maybe a high increase in atmospheric related contaminants that should be looked at, or even, preventatively bringing up solutions to the client saying, we've identified that your conveyor belt has potentially got an increase in current consumption over the last 12 months. Can you have a look at it and see what the cause is?
Very interesting. So just to clarify then, is this ultimately using sensors that are basically connected to the internet and that they are being monitored somewhere above ground?
To an extent. So a lot of our clients are still adverse to having cloud-based connectivity, and most of it's on premises, but we do offer both. But yes, it is either whether it's a Becker technology from our sensors or third-party technology, we can integrate those sensors into our software application and give the client a global overview of what's happening in their operations.
And so, in terms of what is happening and communicating throughout the organization or throughout the mine site, is there a difference between, communicating above ground and communicating underground?
Yeah, there's a huge difference. I remember an article some years ago about a telco operator in Africa boasting about how simple it would be to do an LTE solution on this particular mine that he keeps on driving past every day, because he just sees this little outcrop of the head frame and he thinks that's pretty much the extent of what a mine is. So underground communication is by far more complicated due to just the vast tunnel distances that would have to be traveled and effectively have communication in that underground infrastructure. So yes, on surface, we can stand and shout at each other and your voice carries a certain distance. Underground, you don't have that luxury. So it is by far more complicated, as well as the risk associated to it. If you go underground, you're pretty much there for 8 hours. You can't just pop up from underground every 5 minutes to fix something. Beck has been doing this for some years. I've been with the group now for 23 years. And from a radiating cable infrastructure, we've covered it all. We've done various tests from, Africa all the way through down to the States and in Canada. And time again, radiating cable infrastructure has proven to be the most resilient and ideal suited for tunneling applications, specifically when it comes to blocking of infrastructure, whether it is steel or rock infrastructure. We have seen over the years some people trying to do what we call distributed antenna solutions, and those would be heavily impacted by metal and other obstacles in the line of sight of that communications signal.
Okay, very interesting. So do you use cables then? Is that how you solve for that?
To an extent. So, not every mine is the same. Every client's got a unique difference. So we prefer to coin the phrase of hybrid solutions. So we would not advocate one specific solution for all our clients. We have a myriad of different applications that we can augment and change according to the client's needs. So more often than not, it would be probably 90% cable infrastructure with some antennas in the remote working areas where having cable infrastructure based on blasting activities is not feasible.
Okay, very interesting. Now, of course, AI is the big technological revolution that we have going on right now. I'm sure your clients ask you about it. I'm sure you're incorporating it into your business. So how are you utilizing AI? And, in a bigger sense, like how is the mining industry, how is it using AI in this regard?
You're right. It's a catchphrase. A lot of companies are using it as a go-to-market sales pitch. I think very few are actually implementing it in a proper way, in a sustainable way as such. So Becca's got two avenues on it. One is from our sensor perspective, where we do vision AI, physically taking video data and sensor data and giving the client reports based on what we perceive to be issues. So typically, whether it's on a conveyor belt, identifying blockages before it happens as a solution. The other one being from a software perspective. So if we look at the digital mine or digital twin, we would look at the data and be able to give you some assumption as potential, restrictions or pitfalls coming down the line on your product process. But we are also then able from within the application utilizing AI. So in the past, if you wanted reports, you needed to have these pre-written, rather structured, where we can now do those queries from an AI perspective. So typically having to rewrite a report saying, I'd like to know which person's underground at what time, in what location, we can now type that into the actual context of the software and it would formulate the report based on the client's requirements or criteria.
Okay, excellent. And so where do you think this is going in terms of AI? Like, are we just getting started in terms of the innovation here? How do you see where things might go from here with AI?
I don't think AI is really as intuitive as what everybody thinks it is. It's still years away from a self-sufficient system thinking about how to do things similar to a human being. What it is aiding us is taking away a lot of the monotonous visual inspection. Again, back to cameras. If I had to have a security guard sit and look at a camera for 8 hours, they tend to become blind to what's going on because it's so accustomed to them. Whereas AI would look at those minute differences and flag that for a person to review. So I wouldn't see it as replacing people. I would think of it more as aiding people to be more productive.
That is very interesting. I tend to think of that myself with AI, that as a collaborator, it's wonderful. So as we start to wrap up here, Albert, what processes in mining operations can be digitized and what are the benefits of digitization?
Yeah, so, Becca's got 6 core products. The one that comes to mind with regards to that would be our power distribution range, which we coined ENDIS, which actually has the capability of remotely monitoring all of our electrical apparatus and remotely safely disconnecting components. So typically, I think, from a power distribution perspective, you would be more often than not almost forced into a specific product based on the requirement. Whereas if you do the automation on that, you can have one product that you can customize remotely through a bunch of data sets and make it usable in a myriad of different applications.
Okay, excellent. So what is it that you want people to know who are listening to this conversation? What do you want them to take away from what we're discussing here about Becker Mining Systems?
Yeah, I think the key takeaway from us is that, Becker Mining Systems is a family-owned company with grassroots in mining, whereas the majority of our staff members are actually ex-mining people, whether it's from a physical mining perspective or engineering aspect. We live mining on a day-to-day basis. Our products aren't commercially off-the-shelf products that we buy from Best Buy or equivalent and cram into a box to supply to mining companies. They're custom designed from the ground up specifically for miners and mining environments.
And finally, who should contact you? Who is your typical customer? What kind of people should reach out to you? And if they want to, how should they reach out to you?
Again, our contact details are on the webpage. All the email addresses are there. I'm happy for anybody to contact myself or any of our staff. We are willing and hoping to talk to all walks of life. So whether it's a junior person starting at a mining company or a senior executive, we like to engage with the whole life cycle of the mine. The reason why is we might end up having solutions for the junior guys with regards to key requirements, or we might have insight with regards to specific mining practices. Case in point being the monorail systems that is revolutionized for coal mining application, but not overly used in hard rock applications.
So the website is becker-mining.com, becker-mining.com. Albert Bauer, CEO of Becker Mining Systems Canada, thank you for joining us and sharing everything that you're working on at the company.
Thank you, Adrian.
And thank you once again to Becker Mining Systems for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit becker-mining.com. Turning to the website, we have a column from Reuters. LME copper hits record highs as funds and fundamentals align. And this is by Andy Holm on October 31st. Copper just made the headlines again with the London Metal Exchange price punching out an all-time nominal high of $11,200 per metric ton on Wednesday. Macro and micro drivers have both turned price positive, and fund managers have jumped back in on the long side, adding financial potency to the bull cocktail. Investment fund positioning on the LME copper contract has risen to levels last seen in March, just before U.S. President Donald Trump's Liberation Day tariff tsunami. While copper's demands brighten, its supply challenges accumulate. A string of copper mine disasters this year is likely to result in a refined metal shortfall in 2026, according to the International Copper Study Group. Add inventory dislocation to the mix, and it's not hard to understand why Dr. Copper is back on the investment radar. For now. Also relating to copper, we have a story from Cecilia Jamazmi on mining.com. Teck's QB turnaround lifts hopes for $53 billion Anglo merger. Teck Resources said on Monday its Cabrera Blanca mine in Chile is showing signs of recovery, following months of underperformance that raised questions about the mine's viability and future role in the company's $53 billion merger with Anglo American. The Canadian miner noted that mill throughput and copper recoveries at QB are now tracking in line with expectations thanks to an action plan launched in August. The improvements follow a broader operational review that began in September, aimed at stabilizing the ramp-up of its flagship copper expansion project. The QB action plan includes upgrades to tailings infrastructure, with 59% of the mine's cyclones now replaced. Full replacement is expected by the end of 2025. The company also completed construction of 3 new rock benches, with 2 more scheduled for mid-2026. Continuing on, African copper exports to China disrupted amid Tanzania unrest. African copper shipments to China are now being disrupted by the temporary closure of a crucial exporting port in Tanzania following election unrest. Copper traders and producers in the Central African Copper Belt are now seeking to reroute cargoes from the port of Dar es Salaam, leading to congestion at other ports including Durban and South Africa, according to several people involved in the market. The port closures also mean that copper already delivered to the port is stuck there for now, some of the people said, asking not to be identified discussing private business matters. The port of Dar es Salaam is the heart of the copper and cobalt trade from mines in the Democratic Republic of Congo and Zambia to China, which consumes more than half of the world's copper production. The port has attracted growing flows of metal by offering more competitive freight rates for China-bound shipments. One senior copper trader estimated that roughly 2/3 of African copper shipments to China typically move through Dar es Salaam. Another railway story, this time the Lobito Corridor. Angola seeks $4.5 billion for rail link to Zambia's copper belt. This is Bloomberg News via mining.com. Angola is seeking $4.5 billion in funding to build an ambitious rail link to neighboring Zambia's copper-rich region, Transport Minister Ricardo Viegas da Breu said. Italy has committed $320 million to the plan, and African Development Bank $500 million, he told reporters Wednesday on the sidelines of a conference in Luanda, Angola's capital. The Egyptian government this week expressed interest in financing the project, he said. The new Zambian spur forms part of a much bigger project known as the Lobito Corridor that seeks to connect the region, boosting trade in minerals as well as agriculture. So they're looking at a $4.5 billion addition to the Lobito Corridor. And another related headline, Glencore said to consider shutting Canada's largest copper plant. It's by a staff writer at mining.com, so it just goes to show how challenging this whole situation is, where the governments are trying to get more capacity while we get weekly stories of plants looking to shut down. This by a staff writer at mining.com. Glencore is planning to wind down its Horne smelter, Canada's largest copper metal producing plant, citing steep environmental upgrades and operational costs, Reuters reported on Monday. The Swiss commodities giant currently operates the Horne and the Canadian Copper Refinery, both located in the province of Quebec. The Horne smelter processes concentrates to make copper anode, which is then turned into cathode by the Canadian Copper Refinery, or CCR. While no production figures have been published for these assets, industry sources cited by Reuters have pegged their annual output at more than 300,000 tons. Much of the copper metal production goes to the United States, a net importer. A closure, according to these sources, would impact as many as 1,000 workers employed on the two sites, which they estimate would require more than $200 million to modernize. However, a Glencore spokesperson, in response to Reuters' requests for comments, denied that the group is considering closing down the Horne and CCR. So a spokesperson is denying it, but there is a report. Another big story, China ends gold tax break in setback for key bullion market. This is Bloomberg News via mining.com. China is scrapping a long-standing gold tax incentive in a potential setback for consumers in one of the world's top bullion markets. Starting on November 1st, Beijing will no longer allow retailers to offset a value-added tax when selling gold they bought from the Shanghai Gold Exchange, whether sold directly or after processing, according to new legislation from the Ministry of Finance. So a gold tax break is being rescinded. Continuing on, aluminum price hits 3-year high as U.S.-China truce buoys outlook. And aluminum is another market to watch. Of course, Indonesia, with the help of Chinese investors, is looking to become a major producer of aluminum. Aluminum climbed to the highest level since May 2022, extending a rally built on tightening supply in China and an improving outlook for demand as trade tensions ease. The light metal gained more than 7% in October, its best showing in more than a year, as investors and analysts bet that a state-imposed production cap in China will incrementally tighten supply as demand in sectors such as construction and consumer goods rebounds. The trade agreement between the U.S. and China lifts, at least for now, a major source of uncertainty for the global economy and the outlook for metals markets. Another big headline, World Bank arbitration body rejects Barrick expedition request in Mali case. This is Reuters via mining.com. A request by Barrick Mining to expedite its international arbitration case against Mali has been rejected. Two people familiar with the matter told Reuters on Friday. The West African country's government has been in fraught negotiations with Barrick since 2023 over the implementation of a new mining code that raises taxes and gives the government a greater share of its gold mines. And of course, the Loulo-Gounkoto complex, the mine license is looking to expire in 2026. So it's quite interesting, actually, that the World Bank has not sped up the request in light of that. Another headline, North American miners sell shares at fastest pace since 2013. This is Bloomberg News via mining.com. So miners are selling the most shares in 12 years. Incredible. Another big headline, China's massive African mine threatens to upend iron ore market. This is Bloomberg News via mining.com. As it says here, the scale of Simandou is staggering. It's the world's largest untapped iron ore deposit with estimated reserves of at least 3 billion tons. Rio's plan involves blasting ore with an iron content among the highest on Earth from an 8-kilometer-long sliver of mountain ridge before moving to a second site once the first is depleted. At $23 billion, it's Africa's biggest ever mining project and could make Guinea the continent's number 2 exporter of minerals and metals by value. Scrolling down, the flood of rich new supplies will give Beijing more leverage to control iron ore prices and curb its dependence on foreign mining behemoths. It will help to turn a weak link in Beijing's supply chain into a strategic strength, building on China's dominance in mining and refining African resources from copper to cobalt and lithium. Even before the first shipment leaves West Africa, market sentiment toward iron ore, the mining industry's biggest earner, has turned bearish. Quote, never before has China held this level of pricing power over the seaborne iron ore trade, said Tom Price, head of commodities strategy at Panmure Liberum. Quote, expect it to start calling the shots from here. So, no small deal there. And here's a related headline. Vale says China iron ore suppliers are mutually dependent. This is Bloomberg News via mining.com. China can't afford to abandon key iron ore suppliers because the world's largest buyer of the raw material is dependent on foreign deliveries of the steelmaking ingredient, according to a top Vale SA executive. The Chinese government established China Mineral Resources Group in 2022 to centralize ore purchasing and concentrate the Asian nation's bargaining power with heavyweight suppliers such as BHP Group, Rio Tinto Group, and Vale. Beijing's push to centralize purchases is roiling the market. CMRG has clashed with BHP by prompting a ban on dollar-denominated cargoes. We were discussing this last week. I believe I read that the final deal with BHP, as far as I understand, is a third of the purchases by CMRG will be denominated in yuan. So as that commentator was saying in the Simandou story, China's starting to get more leverage in the very important iron ore market. Another headline, Coeur Mining buys New Gold in $7 billion all-stock merger. That's by Cecilia Jamasmy at mining.com. Coeur Mining is acquiring Canada's New Gold in an all-stock deal valued at about $7 billion, creating a new North American mining heavyweight amid record gold prices and renewed investor enthusiasm for precious metals. And finally, just a few lithium headlines. Quite interesting. CATL taps outside suppliers for lithium ore as flagship mine stays closed. And that's a story by Reuters via mining.com. So CATL keeping its mines closed and sourcing external ore. Another related headline, lithium prices boosted by China's policy drive on energy storage. That's Bloomberg News via mining.com. And finally, Arkansas aims to become U.S. lithium hub, overcoming Chinese competition and tech challenges. That is by Reuters via mining.com. So lots to check out on the website. If you're not paying attention, just go to mining.com, where you'll see all of these stories and more. So those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.09%. That is 0.12% higher than last week, so back above 4% on the U.S. 10-year bond. The UK 10-year gilt is yielding 4.42%. That is 0.04% higher than last week. The Italy 10-year bond is yielding 3.4%. That is 0.01% higher than last week. The French 10-year bond is yielding 3.44%, that is 0.03% higher than last week, and continues to be above the Italy 10-year bond. Germany's 10-year Bund is yielding 2.65%, that is 0.04% higher than last week. Japan's 10-year bond is yielding 1.7%, that is 0.06% higher than last week. And China's 10-year bond is yielding 1.74%, that is down 0.01% on the week. So 10-year yields climb, except for China, which edges lower. Turning to precious metals, gold is trading at $4,002.50 per ounce. That is $84 higher than last week. Silver is trading at $47.50 per ounce. That is $1.81 higher than last week. Platinum is trading at $1,567.10 per ounce. That is $8 lower than last week. And palladium is trading at $1,450.50 per ounce. That is $31 higher than last week. Turning to industrial metals, copper is trading at $5.03 per pound. That is 10 cents lower than last week. Iron ore is trading at $105.83 per metric ton. That is 42 cents higher than last week, so iron ore edging higher. Aluminum continues to climb at $1.32 per pound. That is a penny higher than last week. Lead is unchanged at 92 cents per pound. Nickel falls to $6.87 per pound. That is 5 cents lower than last week. Tin continues to climb at $16.37 per pound. That is 13 cents higher than last week. Cobalt is unchanged at the elevated level of $22.03 per pound. Lithium is higher at $11.38 per kilogram. That is 61 cents higher than last week. Uranium is also higher at $82.40 per pound. That is $6 higher than last week. And zinc also continues to climb at $1.41 per pound. That is 2 cents higher than last week. Zooming out, a bit of a mixed bag, but overall, generally speaking, metals continue to edge sideways to higher, perhaps on news of diminished trade tensions between China and the United States, and those are your metal prices. Coming up, I'm very pleased to welcome to the program Jack Lundin, President and CEO of Lundin Mining. We discuss the big picture issues facing the mining industry and how he approaches it as CEO, and also how Canada is doing in regard to mining. And we also talk about the world's deepest marathon that Jack ran and finished. I hope you enjoy the interview, and I will see you on the other side. Join us today. I'm very pleased to welcome to the Northern Miner Podcast, Jack Lundin, President and CEO of Lundin Mining. Jack, welcome to the show.
Hi, Adrian. Thank you very much for having me.
It's a delight and a pleasure to have you, Jack. You know, it's a name I've seen many times over the years since I've been working at the Northern Miner. Of course, the Lundin family, a renowned family in the mining business. So thanks for coming on. And so I want to talk about the world's deepest marathon today, but before we do, I thought maybe we could do a big picture discussion here on just where you see things in the mining sector. Of course, it's at the front of all the policymakers' discussions right now. So for you as CEO of Lundin Mining, what's top of mind for you right now as you see this global concern for critical minerals, metals, and the supply chain?
Well, great question. And thanks again for having me on the call. First off, we're in a very interesting time for our sector. Precious metals, base metals, prices are going higher, and we're seeing a lot of volatility because of that. So for us at Lundin Mining, across the Lundin Group and at Lundin Gold, when we're in this period of high volatility, but also, really seeing a lot of tailwinds in commodity prices and things coming up, it really is a time for us to really focus on what we can control. What I mean by that is making sure that our operations are performing well, that we're always looking at driving efficiencies, that we're looking at bringing costs down, but also we're being smart about the environment that we're in and trying to take advantage of opportunities that present themselves when, gold price goes through $4,000 an ounce or copper price goes above $11,000 a ton. So we want to be staying disciplined at all times. But I think also there's unique opportunities that are existing because of, commodity prices going higher. We're seeing our share price go higher as well. We're seeing our cash flows go up. And so, that positions us well for especially a company like Lundin Mining that has so much growth in its portfolio in the near term and long term pipeline. So it's just about, staying disciplined at the end of the day. And we also have to respond to what we're seeing from demand from governments. I mean, in the US, there's a big push for bringing on domestic supply and for really supercharging companies that have interest in North American mining projects and mining operations. So Lundin Mining, we've got the Eagle Mine in Michigan. We're looking at opportunities for extending mine life or, other opportunities in the region. We've got across the Lundin Group with Faraday Copper, very exciting copper play in Arizona. And then with Fireweed Metals, we've got investment from both the Canadian and US government to drive forward with our tungsten project that we have in the Northwest Territories. So capitalizing on opportunities, staying disciplined, and really focusing on what we can control.
Indeed, it seems like a bit of a dream scenario in theory. You have, to the moon gold prices. You have governments more eager than I've ever seen in my entire life wanting mining projects to happen. What's the reality, though? I mean, is there any really big challenges you're facing right now? Because from a distance, it looks like, in a sense, things couldn't get any better.
I think, mining is a very tough business. And we're seeing that, especially on the copper side, prices are going up, not necessarily for, what I would say the right reasons. A lot of our peers are struggling because of supply disruptions, operational challenges, mainly around geotech or natural disasters. And, that's impacting these companies' ability to meet their production targets. And so we're seeing what could be a huge deficit in copper production, especially in 2026. And that's what's been driving copper prices higher. And we never want to see geotechnical failures resulting in fatalities in our industry. I mean, we just know that we're in an operating environment and in an industry that is complex and is very challenging. So while commodity prices are going higher, our share prices are going higher. If you just look at those metrics, it's good for our business. But when you look at why a lot of these prices are going higher, it's because of supply disruptions due to challenges. So, I feel for companies that are having those challenges. In the past, Lundin Mining has had geotechnical challenges, and we learn from those events for sure. We also try and learn from what's happening with these other companies that are encountering these disruptions, because that's kind of free learning. So what critical controls do we need to implement to our operations to avoid, issues that ultimately result in production coming offline? So, I think there's a lot of wind in our sails. There's a lot of great opportunities. It's a very exciting time. That being said, we're in a very complex, very challenging industry. So we just always have to come back to staying humble, staying disciplined, and focusing on what we can control.
Yeah, I think that's really well said. In a sense, to a certain degree, if we were to get in the mind of a CEO, it's about staying in the game and not screwing this up to a certain degree and staying on the road, so to speak.
Yeah, I mean, it comes down to your planning cycle and making sure that you're setting achievable targets every year and looking out into the future and seeing what are our operations capable of producing and generating financially. And, trying to just come out and say, this is what we're going to produce at this cost, this year, next year, and the following year. And if we can hit those targets, you get confidence in the name. And I think that impacts positively, shareholders or prospective shareholders that say, we want to invest in those guys because they've got, stability, they've got consistency, and they've got a simple story. And I think we've got all of that at Lundin Mining. And so it just comes down to a good planning cycle, doing what you say you're going to do, and, doing that consistently.
Okay, excellent. Now, just a couple more questions here before we get to the marathon. In terms of the discussion around critical minerals and rare earth, it seems like all the focus is really on what I call specialty minerals, so to speak. These more kind of, for lack of a better term, obscure metals that are required for the next generation of technology. Do you think there's enough concern right now around base metals?
I think so. I mean, yeah, the rare earth minerals and, the issues that we're seeing with governments like the US and Canada not being able to secure supply of critical or rare earth minerals. I mean, rare earth is a bit of a catchphrase because, rare earth, it's talking about, unique metals that exist in smaller quantities, that you don't need as much volume in order to really move the market. Copper, the world consumes around 25 million tons per annum. So it's a much bigger sector. But when you look at the landscape of the copper sector today, as I was mentioning, there's so much supply coming offline. Next year could be maybe the biggest deficit in 15 to 20 years. So I think that's going to wake up, a lot of governments to say, okay, what can we do to ensure that we've got this supply of this industrial metal that's required for, basic applications like, development and industrial uses, but then also for the electrification of the grid infrastructure associated to, electrical vehicles, EVs. And then also now this massive trend with artificial intelligence and generating that data through these hyperscaler data centers. I mean, new sources and new uses for copper are also driving that demand higher. And then you couple that with supply disruptions. I think that's why we're seeing today copper hitting an all-time high. So I think there's a renewed sense of interest or, maybe even a sense of urgency on what you're classifying as rare earth minerals, but also it's going to be coming as well, much more significantly, I would say, for base metals and predominantly copper.
How is Canada doing from your perspective? It seems like there's a lot of focus and good intentions in terms of, encouraging mining and investment in Canada. What do you think Canada could be doing better? Do you sense that Canada could be improving somewhere? Is there a snag you're hitting as a, Canadian mining company?
Well, I think there's always room for improvement across the board. I think, the jury would still very much be out on what we're seeing in Canada and, the push for finding a way to fast track what's deemed kind of projects of national interest. I think, there are certain jurisdictions in Canada that are very challenging to develop and operate in. And then there's certain jurisdictions that are easier that, you can see line of sight on how to get permitted and how to go into development and how to have an operating license. So it really depends on where you're located. For the Lundin Group, we do have companies that are invested in properties and projects within Canada. So as I mentioned, we've got Fireweed operating in the Yukon. We've got International Petroleum Corp, which is operating in Alberta mainly, also with some assets and some production coming out of Saskatchewan. It just really depends on where you are. But I think Canada and what we've seen over the last 10 years, I mean, you just have to look at the numbers to see that, GDP growth has been stagnant in this country and that we used to be at one point in time a resource-driven currency or a commodity-driven currency. However, today the Canadian dollar is still very, very weak, but commodity prices are going higher. So there's been a decoupling over the years, and I think we'll see and hopefully see improvements and more projects going into development and more opportunities where companies and international investors will want to put their dollars in Canada, but the jury's still out. That's not happening today. So I remain hopeful, but we still need to see significant improvements to basically bring in more investment and more production coming from such a resource-rich country with such significant opportunities like Canada. So I'm hopeful, but we still need to see more.
I just think that's such a great point. I mean, you think of 2007, and I think I remember my parents, buying a property in the States because the Canadian dollar was at $1.11 or something, like it was incredible. So it's a really interesting point you bring up there with the decoupling. So, okay, let's turn over to this world's steepest marathon. This took place at Boliden's Garpenberg zinc mine in Sweden. You participated. I guess, first off, are you a marathon runner? I assume you've done something like this before.
It was actually my first marathon and potentially my last marathon, but it was it was a fantastic event that you're right, Boliden put it on. It was on Saturday, October 25th, so just this past Saturday in what I would consider a very, a world-class operation in Garpenberg, just north of Stockholm. So it was super exciting, but super challenging as well.
I mean, yeah, we just had a story by Blair McBride on the Northern Miner. It sounds like it was humid and dark. I've only been inside a mine once, and it was more of an exploration situation. When I see the pictures here, it looks a lot more developed, but the air quality wasn't wonderful, that's for sure, when I went a kilometer underground. This was a kilometer underground. Again, it looks pretty clear here. Were you concerned at all? I mean, that would be the first thing that would cross my mind is health concerns being underground. Did you have any concerns there?
Knowing who was organizing the event, I never really had concerns about the quality and the planning that was going to go into an event like this. So with Boliden and the ICMM that were, putting it on, and BecomingX, the organizing group that runs extreme adventures like this, we were in good hands always. And I know the operating, standard for Boliden is top notch as well. So wasn't worried about kind of health concerns. It was more just about like, okay, we got to run a marathon 1.1 kilometers below sea level, 1.3 kilometers below surface in the dark, as you said, with a headlamp on. And I've worked in underground mines before. Even if you have a good quality underground operation, you're still running on a ground that has loose rocks and pebbles and things and easy to twist your ankle on. So it was more just like, okay, how do I mentally prepare for this environment that I'm going to be in? But overall, like, we couldn't have done it with a better organizing group, I would say.
I mean, you think of running a marathon. I don't think I've ever run a marathon in my entire life, right? Because it's kind of a daunting prospect. Did you run a full marathon?
Yeah, we all did 42.2 kilometers. 57 of us ended up going down there, and we were all able to finish and, achieve what we wanted to, which was, breaking the world record for the deepest marathon ran as a group. And, it was impressive. Some people were, everybody was running kind of at their own pace, but, the energy, the camaraderie that was built there, and just the way that the organization kind of wanted to ensure we were doing this kind of collectively and together, it was super unique. I mean, it was very challenging, but also very rewarding, I would say.
I'm sure. And how did this idea come about? And how did you learn about it? Did people approach you and say, would you like to run a marathon, Guinness Book of World Records potentially? How did this come about?
It initiated with the ICMM and Boliden wanting to demonstrate that, through an awareness campaign, that mining today is much more modern than what probably the, average person would perceive it to be. And so therefore showing that, you can run a marathon deep in a historic underground mine, and you can do so and come to surface, and yeah, you're going to be sore and you're going to feel the pain from, running something like that, but you're not going to be in harm's way in terms of the elements of what an operating condition would look like. So I was invited back in February by Michael Staffas, the CEO of Boliden. I respectfully declined, and then Ro from ICMM. Lundin Mining is not a member of that, but most of the large mining companies in the world are, and signed up for it. And so Ro called me and said, it would be really good for you to come and do this event. And at that time, I just said, okay, well, fine, let's go for it. It sounds like something that I'm crazy enough to try anyway. So, okay, we'll do it. I was just worried about the training because, it takes a lot of time to prepare the body for a marathon. But in any case, I accepted after that call from Ro. And then, the rest is history. We made it happen.
Yeah, it's amazing. And when I see the pictures, I see people wearing helmets. So I guess there was, protective gear that you had to wear being in a mine. I imagine, this made things more challenging for you.
Yeah, well, wearing a hard hat, wearing a headlamp, and then wearing a high-vis running kit, I think definitely added to the experience and made it, a bit more challenging. The temperature, I was expecting it to be, a lot hotter. Like it was still, I think, over 25 degrees, but I was expecting it to be the temperature to be the biggest challenge. But it was really the humidity that was what made it more challenging for me, at least. I mean, you started sweating kind of right away. So it meant that we had to drink a lot of water and a lot of electrolytes. And so kind of just managing your water intake and making sure that, I wasn't losing too much and still kind of having the right proper fueling was really hard to manage, but got through that. And overall, yeah, I was really really pleased that I came out without any injuries and was still smiling at the end of it. So that made it all worth it.
Yeah, that's good to hear. And it looks like it was a pretty diverse group of people. Could you speak about that a little bit? I mean, was it people from all over the mining industry? Was it mostly executives? Who ran this marathon?
So there was a mix of mining executives and then individuals that worked at Boliden and then other kind of management level positions from, a whole suite of companies across the sector. So all in all, a great group of people. I knew a few of them prior to it going in, but made some new contacts and just enjoyed being in the company of a lot of really good people that, were super excited to take on a challenge like this. So you kind of had a mix of executives from companies. We also had the World Gold Council that was a key sponsor, and so they had some representation there as well. And it was a diverse group of people, kind of at different ages, different fitness levels, and everybody was able to just lock in and make it happen. So it was a very special event.
I wonder to myself, like, I imagine you've spent a lot of time underground at mines before. In a sense, by doing something so different underground, did it change how you see underground mining? Did it change your perception at all by doing such a different activity underground?
That's a really good question. I mean, for me, I've worked in underground mines before, and in April concluded the sale of our 2 European assets to Boliden, so Lundin Mining. We had for over 20 years the zinc mine in Sweden, pretty close to the Garpenberg mine in location. So, saw the environment. It was also an older historic mine that utilizes a lot of innovation. So, similar kind of operating climate. And so I don't know that my perception of mining underground has changed. It maybe was just an experience that, because it was so recent, like I still have blisters on my feet. It was on Saturday and today is Wednesday, so still recovering. Maybe in time I'll have a different or newfound appreciation, but I've been in this sector my whole life, and now running a marathon underground, it was unique for sure. But I'm happy to be contributing to something that can show the world, mining is much different today than it was 100 years ago, and it continues to get better. We continue to implement new technology, new innovation, manage critical controls better safety standards, better environments for those that are working, at the face, at the operation. And so it's a better climate all around.
Okay, excellent. And just finally here, the BecomingX Foundation, this is to support disadvantaged students in Africa. Is that correct?
Yeah, that's right. So we raised funds for the BecomingX Foundation, which is focused on supporting young people in South African mining communities, and for Wild at Heart Foundation, which is, it funds and supports animal welfare projects. So both of those foundations, with the generous commitments from my network that I tapped into, we were actually able to raise over 115,000 Canadian dollars. So very pleased with that outcome, and still more funding coming in. So yeah, thankfully, the event centered around improving the image of mining as a whole, but also 2 meaningful charities that we supported.
Jack Lundin, President and CEO of Lundin Mining, thank you for joining us and sharing everything you're working on at the company and at the world's deepest marathon. Thank you once again to Becker Mining Systems for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit becker-mining.com. And thank you once again to Jack Lundin for appearing on this week's program. And thank you, dear listener, for continuing to support this podcast. If you want to help out the show, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.